What's up, you guys? My name is Carson Rouse, and welcome back to Business Buzz, where we focus on business, entrepreneurship, and investing. Today, I'm going to be going through my 3 favorite stocks of June 2021. I try to put out these videos on a monthly basis where I go through 3 stocks that I think are really strong buys, and here are my 3 picks for June. But before we get into the 3 picks, make sure to go down and leave this video a big old like. I would appreciate it. Number 1, Jushi Holdings. Jushi Holdings is a relatively small company compared to the other ones I'll be talking about, with a market cap of only $1 billion. It's still a large company, but it's not as big as the other ones on this list. This company operates an entire family of marijuana brands, including Tasteology and Nira. This company is also very cash heavy right now. They have around $170 million in cash or cash equivalents right now. Having a ton of cash is great for a growing company like this that could use that cash to expand into other sectors of the cannabis market, including different products and other retail locations. Jushi Holdings is also looking to expand into more states. In fact, they are one of just 34 companies in Ohio that are now authorized to sell medicinal marijuana, and I actually live in Ohio.
Smoke weed every day.
The long-term potential in this stock is huge. Marijuana for both medicinal and recreational purposes is probably going to be legalized throughout the entire country within the next decade or so, and this company is poised to be a direct beneficiary of that. They're also just very well diversified. This is a great marijuana company that I think you may want to consider investing in. Number 2, Ulta Beauty. In the wake of our country returning back to normal, in fact, I think things are already basically getting back to normal now. This is a great stock for you to consider. Retail traffic is predicted to go back to normal levels within the next few months, and Ulta Beauty, being in the retail space, will benefit from this. This company is one of the largest beauty retailers in the USA. Specifically, they specialize in selling cosmetics like makeup. They also sell fragrances and skincare products, basically anything that somebody who's into that stuff would desire, they have. This company has been gaining market share ever since the pandemic hit, and they've also recently been heavily investing into their e-commerce sector of their business. And I think it's pretty safe to say that e-commerce isn't only the future, it's the now. So you love to see a company heavily investing into something like that and not being just so stubborn and stuck in their roots. Currently, the stock is selling for around $340 a share, whereas last year it was selling for around $240 a share. I know a lot of, especially new investors, when they see that a stock has performed really well in the last year, 2, maybe even 5, they just want to stay away from that stock because, oh my God, it's went up so much, it's bound to go down or it's bound to calm down. And while that might be the case, just take a look at Apple the last 20 years. If you had that same mindset with Apple, then you probably didn't invest, and we all regret not investing in Apple 10 and 20 years ago. So keep that in mind. It's also important to note that according to most metrics that can determine whether a stock is undervalued, overvalued, and just my own personal opinion, I think that they are still massively undervalued as a stock. They just recorded Q1 net sales of $1.9 billion, which has a year-over-year increase of 65%. A lot of this has to do with the government stimuluses going to businesses, and of course a lot more of it has to do with the restrictions being lifted from COVID. The earnings per share for this company for the first quarter of 2021 was also $4.10, which was about double what analysts were predicting. And just by the full year guidance and the way they're looking ahead, it looks like this company's momentum is going in the right direction, and management seems pretty optimistic. But of course I do, they're management. And number 3, Qualcomm. Qualcomm is a $150 billion company that specializes in making semiconductors and different telecommunications equipment. They have over 41,000 employees across about 40 countries around the world. This is also a very well diversified company. I like when my large companies are well diversified. Like, Twitter isn't very well diversified. Qualcomm has multiple different segments where they're bringing in money and they're not straddled down to one source of income. Right now they're sitting at around $134 a share, where about a year ago they were sitting at around $80 a share. So again, a great big jump, but that's just about how every stock did in the last year. It's been a really good year for the stock market ever since the pandemic lows. They've also reached highs of around $170 a share, so I think this is a great investment that you can make, especially considering that their PE ratio right now is around 19. Now, I know what you're thinking. 19, that is way too high. This company is way too overvalued. But actually, if you compare with their competition, in their industry and their segment of their industry, 19 is actually a relatively low PE ratio, signifying that they might be undervalued. Qualcomm is also one of the best companies leading the charge for 5G. I'll be honest, I don't fully understand 5G. But you know what I think of when I think of 5G? The future. And I like thinking about the future when I'm investing. Qualcomm also experienced a 40% growth in sales in the year 2020, and that is pretty fantastic for such a large company. They also carry a 2% dividend with it. So for you dividend lovers out there, just like 2% is not too shabby for kind of a growth stock, right? They also have around $10 billion in cash that they can use in their strategic initiative segment, which is basically fancy for expanding into new things, new products, new ideas, just putting money out there to get better returns, pretty much. Anyway, thank you guys for watching this video. I hope that you took something away, and I hope that you might consider investing in one of these 3 stocks. But remember, I'm not an expert. You got to do your own research. Be sure to subscribe to BusinessBuzz for more investing content, also videos on business ideas and things of the sort. So if you enjoy that kind of content, be sure to go down and subscribe. I'll see you next time.